Hey everyone, welcome back to Corporate Decoder, the place where we make every dollar spoken and every filing shaken or stirred. Today we're diving into an amendment for Odyssey Health Incorporated, filed on August 15, 2025. This isn't a full new report, but rather an update to a previous filing. Think of it as adding a new chapter to a story that's already in progress. Specifically, this is amendment number 1 to their Form S-1 registration statement. Now, what is an S-1 form? Essentially, it's the document a company files with the Securities and Exchange Commission, or SEC, before it can sell its stock to the public for the very first time. So this amendment is a follow-up to that initial going public registration. What's interesting here is that this amendment doesn't actually change the main part of their plan, the prospectus, which is what tells potential investors all about the company and the stock being offered. It's just updating a few other things. They're doing this mainly to file a new legal opinion document, which is Exhibit 5.1, and to update their list of all the exhibits they've included. Now, let's get into the meat of what this amendment does change, which falls under Part 2 of the filing. This section covers information that isn't strictly required in the prospectus, but is important for the SEC and for understanding the company's operations and obligations. First up is item 13, covering the expenses related to issuing and selling their securities. This table gives us an idea of the costs involved in bringing their stock to market. We see an SEC registration fee of $66.50, which is pretty standard. Legal fees and expenses are estimated at $1 and accounting fees are around $3,000 and olified odd, and accounting fees are around $3,000 and accounting fees are around $3,500. The total here sums up to $21,066.75 in estimated expenses. These are the costs the company expects to pay to the government and to its professional advisors for this registration process. It's like the processing fee for going public or making amendments to that process. Next, item 14 talks about indemnification of directors and officers. This is a really important section for anyone involved in running the company. Basically, it outlines how the company will protect its leaders, like directors and officers, from financial losses or lawsuits that might come up because of their decisions while working for the company. Because Odyssey Health is incorporated in Nevada, this section references Nevada state laws, specifically sections 78.751 and 78.7501 and 78.7502 of the Nevada revised statutes. These laws say that if a director or officer acted in good faith and reasonably believed their actions were in the company's best interest, and if they didn't knowingly break the law, the company can cover their legal costs and other liabilities from lawsuits. This is pretty common for publicly traded companies. It helps attract qualified people to leadership roles by reducing their personal risk. Vaccinal risk occurs. The company's own articles of incorporation and bylaws also confirm this commitment, stating they will indemnify their leaders to the maximum extent allowed by Nevada law, and can even get insurance to cover these potential liabilities. This is standard practice to ensure they can attract and retain talented leaders who might otherwise be wary of the personal risks involved in corporate management. Now, item 15 is where we look at how the company has used securities like stock and options in the past when they weren't registered for public sale. This section details transactions that happened outside of typical public offerings. In 2023, they granted a significant number of stock options. That's the right to buy company stock at a set price to their internal team. We're talking 6,500,000 options with an average price of 22 cents to buy the stock. On top of that, they gave out 2,000 restricted stock units, or RSUs, which are basically shares of stock that become fully theirs after a certain period or if certain goals are met. These had a value of about after a certain period or if certain goals are met. These had a value of 0 to 32 cents to buy the stock. On top of that, they gave out 2,800,000 restricted stock units, or RSUs, which are basically shares of stock that become fully theirs after a certain period or if certain goals are met. These had a value of 0.30 per shares of stock that become fully theirs after a certain period or if certain goals and restricted stock units, or RSUs, which are basically shares of stock that become fully theirs after a certain period or if it's certain goals. They also issued a lot of stock to consultants. Between September 2022 and March 2023, they gave out 2.3 million shares of their common stock to consultants who were helping them out, valuing these shares at an average of 119x each. This means they paid about 413 services during that period. There's also a note about a $30,000 promissory note from September 2022 given to a consultant for investor relations. This note had an 8% interest rate and was due by the end of that year. It got extended a few times, and eventually in June 2023, this loan was converted into 300,000 shares of common stock, valued at $36,000. So they essentially settled a debt with stock. In November 2022, they issued 1 million shares to Prevacus as part of an option agreement valued at $0. A significant deal happened in December 2022 with Mast Hill Fund. They entered into a securities purchase agreement, which is basically a contract to buy or sell securities. As part of this, Odyssey Health issued warrants to Mast Hill. Warrants are similar to options, giving the holder the right to buy stock at a certain price. They gave Mast Hill warrants for 2 million shares at $274,000 and another set for 4 million shares also at $2.10 per share, valued at 20 per share, valued at 5 and on something. Later, in June 2023, Mast Hill converted $42,000 worth of interest and fees into 560,000 shares of Odyssey Health stock. This shows how convertible debt and interest can turn into ownership for investors. Clearthink Capital Partners also exercised their option to convert a convertible note. They had a note for $175,000 plus $20,000 in interest. By converting this, they received 975,000 shares of common stock at $0.20 per share, effectively turning their debt into equity. Mast Hill was active again in January 2024, converting another amount of debt, interest, and fees totaling $50,040 into 695,000 shares of common stock, with the conversion price is lower than before, which is common as a company's stock per share. Notice the conversion per share is lower than before, which is common as a company's stock price might fluctuate. Also, in January 2024, they issued a large number of warrants, over 12.4 million of them exercisable at 0.720 per share, with a total value reported as 63,455 Terci Bowers. These warrants were set to expire in December 2027. This shows a strategy of using warrants to potentially raise more capital in the future if the stock price goes up. The document then clarifies that all these past sales of unregistered securities were done under an exemption in the law, specifically Section 482. This basically means these were private transactions not offered to the general public, and they were likely limited to accredited investors, those who meet certain income or net worth requirements and are considered sophisticated enough to understand the risks. It explicitly states these investors were accredited and were buying the stock for investment, not to resell it immediately. They also confirmed they could handle the risk. This is standard for these types of exempt offerings. Item 16 is about the exhibits and schedules that are part of the filing. Think of exhibits as supporting documents for the main registration statement. They mention that all financial statement schedules have been omitted. This usually happens when the information is already included in the main financial statements or their notes, so there's no need to repeat it. Finally, item 17 lists undertakings. These are promises the company makes to the SEC about how they will handle future filings and disclosure. One key undertaking is that they promise to file post-effective amendments, which are updates to the registration statement to include any required prospectuses or to reflect any fundamental changes in the information previously provided. This ensures that investors always have the most current and accurate information. They also state that if this updated information is already available in their regular SEC filings, like quarterly or annual reports, they don't need to file a separate amendment for it. This makes the process more efficient. The rest of the document is the Exhibit Index, which is essentially a table of contents for all the supporting documents filed with the SEC. It lists agreements, legal opinions, and other important papers either filed with this amendment or previously filed. We see references to their articles of incorporation and bylaws going all the way back to 2014, which are basic governing documents. And this is the new exhibit. They're filing an opinion from their legal counsel, Breen and Associates, LLC. This is likely a legal opinion on the stock being registered, confirming its legality or something similar. There are also many agreements listed, like employment agreements for key people such as Joseph Michael Redmond, their president and CEO, dating back to 2021. And looking at more recent agreements, there's a purchase agreement with Mast Hill Fund from July 2025, filed just before this amendment. This signifies ongoing business relationships and likely funding activities with key investors. We also see consents from accounting firms like Turner, Stone and Company, LLP, which is necessary for their audit reports, and a power of attorney designating Joseph Michael Redmond and Christine Farrell to act on behalf of the signatories. Finally, we get to the signatures. This is where the company's officers officially sign off on the filing. Joseph Michael Redmond, who holds multiple key roles like President, CEO, and CFO, signs on behalf of the company. This double-hatting is common in smaller or growing companies. The Power of Attorney section reiterates that the company's leaders are authorizing specific individuals, Joseph Michael Redmond and Christine Farrell, to sign all necessary documents with the SEC on their behalf. This is a standard legal delegation to keep things moving efficiently. Now let's look at Odyssey Health Incorporated from a broader perspective. This filing, while an amendment, gives us a snapshot of a company actively engaging with capital markets, particularly through unregistered sales and strategic investor relationships like the one with Mast Hill Fund. The heavy reliance on consultants compensated with stock and the frequent conversion of debt into equity suggests a company that might be in a growth phase but potentially facing cash flow constraints, often relying on equity financing and debt conversion over direct cash. They are clearly working hard to maintain compliance and transparency with their filings, which is a positive sign for investor confidence. The indemnification clauses are standard but important for attracting talent. Overall, Odyssey Health appears to be navigating the complexities of growth and financing using various tools to manage its capital structure, and this series of filings indicates a company very focused on its public market presence and investor relations. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord linked in the description for more exclusive content and discussions. Thanks for watching. See you next time.